Hello, everyone. Happy Sunday. How are we doing? Hope you guys are doing great. Ryan, hello, hello. Unicorn Queen, happy Sunday. Musab, happy New Year. May this be a prosperous year. Absolutely. Absolutely. Frank, happy Sunday, my man. Cleo, happy Sunday, guys. Joe, glad to have you, brother. Peter, Dylan, my man. You want to come have dinner at my house sometime? Where are you from, Peter? Where are you from? Ali, happy New Year. Kevin, happy Sunday, brother. Hope you're doing good. Make sure we got an audio check. All right, we're good to go. Peter, hey, remember how we were talking about UFOs? Yeah, funny stuff. They got a lot of things coming this year. Got got quite a bit coming this year. So it'll be an interesting one for sure. But yeah, they're just kicking it off. UFOs, and we're already in the first week of the new year, huh? Kevin, happy New Year, Dylan. Happy New Year to you as well, brother. Jeer, happy all days. Absolutely, every day's a good day. Jeer, Frankfurt, awesome. Tuning in from Frankfurt. There you go. And happy New Year, Dylan and everyone. Glad to have you in. Bags, happy New Year. Michael, hello, hello. James, what's going on, man? Alrighty, guys, we are back again for the weekly outlook for non-farm payroll week. So what I'm going to go into today, usual business, go into our intermarket analysis, start with the US dollar, go into the bond market, and then from there wrap up with index futures. Then from there, I'll take your guys' questions, and I'm sure you guys have here cooked up over the week, and we'd be more than happy to cover those here for you guys. So with that, I don't have our handy dandy PowerPoints here ready to go today. I will start that next week, just so everything's structured, streamlined, and you guys can even use those PowerPoints as screenshots to use and refer to throughout the week. But since it is non-farm payroll week, it is really my first week of trading. Did a little bit of light trading on Friday, but this is really the first week where I'm going to be getting after it. So with that, after this week, I will get back to it with the PowerPoint slide presentation style. So with that, guys, I appreciate you guys joining us. Ali, sell, short every market. Man, with the way the dollar's ripping, absolutely, absolutely. So with that, guys, let's get into the business. And then as always, we'll make some time for some Q&A at the end. Don't know how long we're going to go for that. It's already been a long day for myself here on my end, but we'll look to attend as many of your guys' questions as possible. Let's go ahead and get to it, guys. Let's start with the US dollar. I'm not sure what's going on there. Alrighty, guys, so let's get started here from the 12-month chart. I want to start from the yearly chart to set our expectations. We are seeing bullish order flow on the yearly chart. What I'm looking for this year in particular will be trading into this high here and these relatively equal highs here, right? So the 12-month chart is something I do refer to from time to time. Obviously, not every day. It's not changing a whole lot since it does take a whole year for a new candle to form. But I do use it for long-term macro perspective, right? So what I'm looking for will be a run into this high here and these relatively equal highs. I do foresee dollar reaching the 120s this year. We've been consolidating for 2 years. We saw 2 small range candles in the 2 prior years. So after that, we generally expect a large range, right? After small ranges, we expect large ranges. After large ranges, we expect small ranges. So I am looking for upside this year for the yearly chart, and you're going to see how that flows top down. Let's drop down into the 6-month chart. We have this imbalance here that we've traded into. We're now respecting, and then the market's working higher. So I'm still expecting the bullish order flow to continue on the yearly, the 6-month, and then we'll refine that as we drop down through the time frames. All right, working into the monthly chart, we've had some long-term targets that we've been looking for here delivered. As you guys recall here in the past year, we're looking for these highs here and here. And then through that, remember what I gave you guys, right? Because the market moves for 2 things. A lot of people like to say ICT is complicated. It's technical, right? You do have to invest some time into learning, understanding, but there's nothing that comes close in terms of precision. And it's not that complicated once you understand the language and you have a foundation. Market moves for 2 things, liquidity and efficiency. They blew these buy stops out here, right? This high here, this high here. They blew them out of the water. So if the market's going higher, we've been calling it higher, and it's already taken out the buy stops, what's it going to reprice into? It's not a mystery. We look at the imbalance, right? Liquidity, inefficiency. The liquidity's been taken out. So what do we have? We have this imbalance here on the one-sided delivery on this one pass down. And then you'll see where we made the high of the week last week. Again, none of this is random. All targets we're looking for. And then we finally had the high of that monthly fair value gap repriced into beautifully. So again, we're intraday traders for the most part. I know some of you guys do swing trade, you do long-term trading and investing. This is what's going to help you with that, right? Because the monthly chart being bullish, reaching into these levels, that makes our weekly bias easy, right? Daily bias crystal clear. And that's how we've been able to walk dollar every step of the way, because again, it's the top-down understanding of how the markets come together, right? So we had the monthly fair value gap fully closed in, exactly what we wanted to see. Now, what I'm looking for January going into February will be the market getting above that gap, right? So I do want to see strength through the high and then get into the highest body here and then eventually get into that 114 level. All right, dropping down into our weekly time frame. A couple levels I want to have on here for you guys. Where'd that go? Well, I'll just label it. So that's a breakaway gap here. We have a breakaway gap here at the low of the price run. Do I want to? Yeah, I'll get into it. So I'm looking at this as a measuring gap. I wasn't going to share all that, but I'll go ahead and get into the explanation. So why am I looking for the 114? Well, obviously order flow is bullish top down. If I expect the market to draw up into this level, right, and this is the beginning of the price run, what I want to see at 50% of the price run is an imbalance left open. Right? I get asked all the time, Dylan, how do we use measuring gaps? How are they helpful in your analysis? You guys see me when I'm live trading, I'll annotate it. Right, I want to see this gap treated as a measuring gap and it'll just sink, right? How do I use that in my analysis? It's across all time frames, right? So it's very straightforward. This is where the price runs beginning down here. We've been calling this market higher, right? It's all there on our YouTube. It's not hidden, it's not deleted, it's all there. If this is where the price runs beginning, right? And this is where I see the market getting up to, this range here. Well, then what I want to do is I want to draw, or I want to pull up my fib tool to where the price run starts, to where I think we're going. What I want to see at 50% of the anticipated price run is a gap left open, right? That is your measuring gap. What this does is it increases the probability that the market's going to get to my final target, right? So the way we use that in our analysis is something I constantly say is this is a probabilities game, right? Even though we can get very, very refined, very technical, very precise in what we're doing, at the end of the day, this all boils down to probabilities. So if I'm expecting the market to get up into these highs here, there's a breakaway gap here at the beginning of the price run, which we want to see, right? And then here you'll notice there's, let me zoom in here. Here you'll notice there's 3 fair value gaps, right? 1, 2, 3. Those of you guys that have been working with me for any length of time, you guys know what 3 fair value gaps signal to us. And we want to see the first one be a breakaway gap. Ideally, the second one won't even be traded into because that's a strength signature. And it's telling you the market's not only going higher, but it's likely going much higher, right? So now I'm kind of showing you guys behind the scenes, behind the curtains as to how we've been able to call these targets, right? Not only in our newsletter, but here live every single Sunday. So now from that level, we trade down into that gap, displacing higher. We had this weekly gap here that we were watching, right? The market did what? Stopped at the mid gap with the bodies. Rotated higher. So what's that tell us? Keep looking for higher prices. So what targets have I been giving you guys, right? Well, the liquidity's been taken out here, here, and here. So if the market only moves for 2 things and there's no liquidity to be taken, what's it going to reprice into? The imbalance, right? So you see the one-sided delivery lower on the weekly time frame, and that's what we've been calling the market to trade up into. Back to the measuring gap. If I'm expecting this range from this low to this high to be traded and be delivered, I want to see at 50% a gap left open. Because as I was saying, it's all probabilities. If I start to see these signatures, it raises the probabilities that this price run is going to be delivered. This is something I use on all time frames. You see I'm using it on a weekly chart. I use it on 1 minute, 5 minute, 15 minute, any chart I'm analyzing, the market's doing the same things. So with that in mind, we had an imbalance here at 50% of the anticipated price run and it's left open. That's exactly what you want to see because that confirms the market is extremely bullish. Wasn't going to get into all that, but figured I'd throw that in there. Weekly fair value gap, the market's closing that in. what you'll notice is we stopped right at this candle's low here, which is the high of that monthly gap, right? So now that we closed above 50% of that weekly gap, I do want to see continuation. And again, if they leave this gap open, then we're likely going to see a explosive price run to get up into these buy stops here. And that's what I'll favor going forward. Let me make sure I covered everything. Yeah, so next targets for me on the weekly chart. First one is the previous week's high. Always want to start with that. Then from there, we have the high of this weekly fair value gap that I'll look for as a target. And then from there, you can split this wick here in quadrants, use that as upside targets. And then if we trade strongly through that, again, we have that 114 level I'm looking for. So the 109 big figure number was delivered to us last week, exactly what we were looking for. Nice bullish price delivery. And then again, on the back of that, I know I'm going to get asked, Dylan, can you take a look at euro? Can you take a look at pound? It's the same thing, folks, right? So looking at the euro, if we're calling dollar higher, what are we looking for euro? To smash lower, right? Euro trading lower, same signatures that we look for, right? Breakaway gap here on euro. This imbalance, we traded up into it. Market couldn't even get the midpoint of that imbalance, and then we're sinking lower. Looking at the pound dollar, same thing. All right, we're seeing bearish order flow. We have lows here, here, and here, and we're looking for pound to continue to accelerate to the downside. So going back to US dollar, let's drop down to the daily. So you guys are seeing all the things that go into why I'm able to see this low here, why that's a stop run to continue higher at equilibrium. Because if they're going to take it higher, they're going to deliver it in a very systematic and consistent way, right? Which simply put, if we have a low, we have a high. Smart money traders are buying the discount below equilibrium. It's a cheap market. But if we're anticipating it going higher, any drop below an old low into a discount creates what? New buying opportunities, right? So this facilitates smart money buying, accumulation. If they're buying here, where are they going to look to sell it? These highs here, and into the inefficiency that we're not trading into. Last week, we looked at this daily imbalance here, extended that through, said we want to see the market find support here and trade higher. Very easy to call the markets when you know where the higher time frames are reaching for, right? In this case, the yearly, monthly, and weekly. Market traded into this gap here. You see how we stayed in the upper portion, right? We couldn't even get down to midpoint. The body staying at the high end, market ripping higher into the premium levels because the signatures that we're seeing in institutional order flow, right? So the market trade down into it, left some of that gap open, exactly what we want to see. And now zooming out, looking for continued bullishness up into that 114 level there. All right, refining this down to the 4-hour chart. We're seeing a retracement here down into these fair value gaps. We'd want to see these imbalances support price. And again, continue to rocket the US dollar higher. Right, that's what I'm looking for, pretty straightforward, top down. What would change my bias? If we smash through these two fair value gaps here, and this down close candle, if we lose those levels, then that will make me neutral to bearish. I'll have to wait for more information. Right, so pretty straightforward, looking for higher prices. But what invalidates that bias? If we get through these 3 key levels to the downside. Now with that, I want to go ahead and confirm that here in the bond market with you guys. Let's go to the monthly chart. So monthly chart, we saw weakness from the monthly fair value gap we were looking for. Market traded up into it, couldn't get the mid gap, and now the December candle was bearish, right? Which gives us confidence to look for a bullish candle in the US dollar. And for those of you guys that are trading foreign currency, lower monthly candles, right? So if you're looking for sell models, I would suggest you probably did pretty well. If you're looking for longs in foreign currency, you probably got cooked, but now you know why. You can fix it for the next time. So let's drop down to the weekly time frame here. We displaced lower, and 2 imbalances were created, right? 1 and 2. We've traded up into it. I'll go into why I want to see that be institutional order flow entry drill, which simply means we don't want to see the market close in that entire gap. I want to see the upper one be a breakaway gap because there's a breaker on the daily chart. I'll get into that in a moment, but the market traded higher into the fair value gap. We created a doji, which we can anticipate if we have a key level and we have a directional bias. What's the bias I've been giving you? Lower. What's the key level? Fair value gap. So if we trade up into it, we can anticipate that being a doji or a reversal candle. And probably go down into the daily downside targets is going to be the sell side here, right? So these lows here on all the respective treasury markets is what I'm looking for. All right, so daily time frame, we traded down, we closed below this low. So I'm going to use the lowest candle. That's going to be our bearish breaker. We're trading up into it, and then the market's selling off exactly what we want to see. A lot of times I'll get asked, well, Dylan, don't we want to see imbalances filled in, right? Don't we have all these fair value gaps here going down? Don't we want to see that get filled? No, not if there's a breaker here. It's going to act as a barrier on price, not let price trade through it. So we actually want to see all these gaps left open. Just one of the ways that you can anticipate fair value gaps being left open. Another thing I'm weighing out here, SMT is something I consistently use in my analysis because it's a helpful confirmation tool. By itself, it's going to be very confusing, and it's going to leave you probably even more confused than if you didn't use SMT. However, if you know where the market's drawing, if you have a buy, or not know, but if you have confidence in where the market's drawing, right, and you're anticipating either a move higher or lower because some higher time frame drawn liquidity, then SMT is going to work wonders in your hands. So I'm looking at this as a bearish SMT. We see the treasuries made a lower high on all of them except one. So I'm looking at this as a run on stops. These are under heavy distribution or accumulation of shorts, and looking for lower prices with the SMT inside of a daily fair value gap, inside of a bearish breaker when we're looking for lower prices top down. So looking for continued bearishness on treasuries, which supports higher US dollar. Alrighty. All right, let's go into NASDAQ. All right, so NASDAQ, what is going on? One moment. One moment, guys. I'm trying to see why there's such a discrepancy between a heavy candle close here versus when I toggle at the settlement, we close here at the 516 level. Very strange, very strange. Let me see the daily chart. Where'd we close? All right, so we closed at 93. Yeah, what the hell? All right, that's a big difference, right? If we close here above this opening price, above that bullish order block, right? Closing there is very significant as opposed to us closing all the way down here. That's how I'm trying to figure out what the hell is going on. I believe this is TradingView's price feed. So I believe that's an issue with the price feed. We did close up here, so we're going to use it with settlement toggled on. Not sure what's going on there, but I just wanted to confirm that threw me off. So looking at the NASDAQ, I'm looking at this down close candle, right? That's a bullish order block with a fair value gap. Also monitoring this imbalance here. We've traded down into it. As you guys know, this will be more clear on the daily chart, but this weekly swing low, right? We were looking for that as a target last week. That was nicely delivered, and then they pulled it back into the range. I wanted to see how we closed on the weekly time frame because right now we're still holding above this bullish order block and this fair value gap. So you see the wicks are trading down through it, but the bodies are staying in the upper half of that fair value gap. So still indicating bullish order flow on the monthly and the weekly time frame. But even though the monthly and the weekly is still showing bullish order flow, that doesn't mean we still can't call lower prices because we're able to see in the lower time frame that it's clearly reaching lower as we were expecting last week, right? So two things can be true at the same time. The higher time frame can be bullish and the lower time frame can be bearish. So we traded down, took out this low, quickly rejected, snapped higher, closed off that low, and now we're above this opening price here. Nice close there, right? None of this is random. So the fact that we stayed above the midpoint of that gap and this order block is still causing me to avoid wanting to call a long-term top, right? We can still call lower prices short-term, but I'm not trying to call a long-term top as of right now because of what we're seeing in here. So what I'm saying is I'm neutral to bullish, and I'll share why going into the lower time frames, and I'll even give you guys some intraday, hourly and 4-hour targets that I'll be looking for so that you guys can still have some insight here going into the new week. Do keep in mind it is non-farm payroll week though, so I'm suspecting we will have much more clarity once the NFP report hits the wires on Friday. So this is what I'm weighing out on the daily chart, or weekly chart rather. Daily time frame, as a brief recap of last week, we created a swing high inside the bearish order block, and a swing high is just a 3-candle pattern, right? Candle 1, 2, 3. Candle 2 is going to be higher than candle 1 and 3. That's a very important pattern in the proper context, right? So we get a swing high inside this gap, inside this bearish order block, and that allowed us to confidently look for the market to trade into these lows here, which is also supported with a higher dollar, right? So we had a higher dollar, lower index futures. Again, the markets are like a finely tuned machine, right? Every part of the machine is going to have an impact on other cogs in the machine, right? So we had this swing low here taken out, and then we saw a rejection in the market snapping higher. What I'll be looking at going into this week, and this will be dependent on the hourly chart. So what you're going to want to do to confirm or invalidate what I'm looking for here is going to be using the hourly and the 15-minute time frame. So we have this daily imbalance here above market price that I'll be looking for as an initial draw, right? So I'll be looking for the up close candle here and that fair value gap, which both happen to be the same level. So that treating that as a bearish order block, I'm using that as a target initially going into this week. And then once we get to that daily fair value gap, I want to see how we trade there, right? And that's what I'll be watching going into non-farm payroll, just for a longer term directional bias. We did create a SMT with the S&P. So ES did not take out that low. And now we're seeing strength to the upside. So what that tells me is we could be seeing a reversal to the upside after running on stops, right? So anyone that tried to buy this market here, they're going to put a sell stop here. Those sell stops have been engaged. Now I want to see how we trade from there. Like I said, it's non-farm payroll, so we'll see what we get here going into the new week. So those are my upside targets, as long as, like I said, you want to confirm it in the hourly chart. How are you going to do that? Well, let's drop down to our hourly chart. This level here should support price. This is a bullish breaker here on the hourly time frame. So I would not want to see us lose this level here and still trade higher. And let's zoom into this here. I want to zoom into this price leg here. All this has been efficiently delivered, right? From here, this imbalance closed in all the way. Markets traded higher. Small inefficiency there, but it's between several balanced price ranges. And what you can see is the market's traded higher, lower, higher. So all of this range here has been efficiently delivered. So what I'll be looking for is for the market to find support inside that breaker. So as long as the market stays above the breaker, right, bullish institutional order flow, as long as that remains true, then I'll be looking for this line here, which is that daily order block with this daily fair value gap here. Again, as long as you remain above this key level here. What we saw on Friday was purge and revert. This was the teaching that I really liked from ICT. I learned several years ago, which is really helpful in my development. Once we take out a key daily low here, right? That daily low has been taken out. That was a target we had last week. So when we reach targets late in the week, that's something that can then allow us to anticipate a reversal. But purge and revert specifically is when a higher time frame level has been taken out, which is what we have here, a daily swing low. And then what you're going to look for is for the market to trade back into the liquidity up to 3 days back. So what does that look like? This is the day we took out the stops, and this is the next trading day. So what I'm looking for is 1, 2, 3 days back. And once we take out a key level, that's the concept of purge and revert. The market's purged these stops here, and now it's going to revert back to the stops in the range. And that's what kind of set the bias for Friday with these relatively equal highs. So I figured I'd throw that in there as well. Bullish breaker, like I said, I am watching that. If we lose that level, then what I'm looking for is, zooming out, these now relatively equal lows, right? This low here is relatively equal to this one. What's going to confirm that is going to be a breakdown through that break. So it is non-farm payroll week, so I am going to be playing it by ear. I don't weigh out a daily bias too heavily on non-farm payroll weeks. It's something that I keep relatively loose. Because it is NFP week, a lot of things can change abruptly, suddenly, so I'm not putting too much emphasis on long-term analysis this week. Again, once NFP hits the wires, then from there I'll be able to make a more educated guess going forward for the rest of the month of January, going into February, and then the spring months from there. So that's what I'm looking at going into this week. Let me see if there's any other markets I wanted to take a look at today. Bitcoin. How's that, huh? Man, I can't believe I almost forgot that. Man, that was the highlight of the stream for me. So this is the market I trade, but I do like to share with you guys different markets because I know many of you guys do look at these markets. And it just goes to show, once you learn how to read price action, the sky's not the limit, right? If you want to be an investor, right, you want to invest in cryptocurrency, how'd I give you guys that discount, right? That 92,000 target I gave you guys, man, that would have been a nice discount to go long if you were a long-term investor in cryptocurrency. So you want to invest, learn how to read price action, right? You want to trade and make consistent income week to week, month to month. Well, then learn how to read price action and trade intraday, right? You run a business, you have a 9 to 5, you're not able to manage intraday trading. Well, then learn how to read price action and become a swing trader, right? So once you understand price mechanics, how the market moves, how it tells you where it's going to go, you can do whatever you want with the skill set. Right? You want to manage your own investments, you can do that. You want to intraday trade and get consistent income, you can do that. You want to have a swing trading portfolio, you can do that as well. Right? So you can do all these things once you learn how to read price action, right? And it applies to all markets. If one of the things we say, if it prints candles, you can predict it if you understand how these components mesh together. So if you guys will recall, I want to do a short review on that. We called this gap here as a breakaway gap. We didn't want to see that one fill in. We said we wanted to see the market stay below this gap here. It did. And then these equal lows here drops lower. And my man Tommy really liked it. I think he made a tweet on my account. Usually a lot of the tweets are coming from my team. The Bitcoin, the equal lows here, right? Whereas most see, I think if I'm quoting it correctly, is most see support, I see fund level stops waiting to be taken. Right? So it's about going against the grain, right? Because what's your average retail Rick seeing here in Bitcoin? Oh, wait, there's that low, another low, they're relatively equal. Man, that's that double bottom I learned in that book I bought. Time to buy it. Well, that doesn't work out too well. But what it does create is a good buying opportunity for institutionally minded investors that want to buy a cheap market and they want to buy from people that are willing to sell it at a low price. Who's willing to sell it at a low price? People that have a sell stop here that went long, or people that want to short the breakout, right? There's a lot of people that see this as equal lows here and here. That's strong support. So if we break that support, that means the market's bearish. So it's time to sell here. So that's either willing or unwilling liquidity in the market efficiency paradigm. We don't care what retail say, right? Or whether they're going short on a sell stop or they're trying to sell the breakout. We understand that there's going to be lots of interest in selling here. Smart money is going against the grain. So when uninformed money wants to short or chase this run, smart money is going to buy that. And that created a nice discount buying opportunity if you're a long-term trader, right? So what I'll be looking for here now in crypto, I like how we traded below that low. We swept that low. If you look at Ethereum, Ethereum did not want to make a lower low. So what you'll notice is we didn't call Ethereum lower, we called Bitcoin lower. And Ethereum did not make a lower low. So that S&T divergence, Ethereum did not make a lower low, while the, almost was going to say S&P, so it's a trading index futures, while Bitcoin did. All right, so correlated asset S&T, very helpful when you know what you're looking for. So what we have now is looking for higher prices as long as order flow remains bullish for Bitcoin. So I'm going to cover that for you guys. Here we were looking at, I know on the hourly time frame, when we were watching this here, I believe it was on, when was it? Yeah, here it was. Yeah, we're looking at the sell side of the curve here. We had these equal lows here, and then those lows, and that was delivered here nicely to us last week. From there, we then displaced higher, and now we're seeing bullish order flow to the upside for Bitcoin. What's the other market? Crude oil. All right, so I'm liking what I'm seeing in crude oil. If we go up to a higher time frame for crude oil, two very small range years. So I'm expecting this range here to be a big range here to the upside. So let's go to the monthly chart. Monthly chart, you can see we've been in a long-term consolidation here for crude oil. The way I like to look at consolidation is it's like a spring, right? So the longer we consolidate, the tighter that spring is being compacted. When we expand out of that, because we know out of consolidation, we always get expansion. The longer a market consolidates, the more explosive the expansion is going to be. So what I'm looking for long term is I think we're going to see crude oil go through the roof once we leave this consolidation, and that will likely take us into three digits a barrel, which is in the hundreds, and then I could easily see crude oil at the 120s here if things really start kicking off. So let's drop down to the weekly time frame. What are potential indications that we're starting to leave the range? Well, we've had a lot of this overlapping price action, which I personally don't prefer to trade. But you can see we're now starting to leave the range higher, right? We see a swing high taken, shift in market structure. And now we have these equal highs here, here, and here to the upside that I want to see the market trade up into. Looking at the daily, right? Again, we've been in this tight range here for a while. We're now leaving that range after trading down into the 3 down closed candles. That's a bullish order block. Trade down into that. Now we're exploding to the upside. So I am looking for higher prices on crude oil right now. 75 a barrel's in sight. How we trade there will determine whether or not we get the 77s. And then I could see crude oil within the next couple months at 79 a barrel and potentially 81. So those are all upside targets I'm looking for crude oil. Again, as long as institutional order flow remains bullish, right? So that's what I'm looking for going into the new year with crude oil. And let me look at the 4-hour. Yeah, we're bullish. And a lot of that's, again, in light of what's going on around the world as well. A lot of things kicking off, and crude oil is highly sensitive to geopolitical and especially war-related events. So with that, guys, that's everything I had to share here. Let me see what you guys got from it. Ali, hold on. Let's learn what Dylan is teaching. Dylan, if external range liquidity. Which asset are you talking about? Dylan, if external range liquidity, the swing low is taken, then moving towards internal range liquidity above. If price doesn't respect that fair value gap, which high are we expecting to be taken? Which asset are you talking about, Ali? And I'll be able to get back to your question. Eslam, why you consider this doji up close candle as a breaker and not the, yeah, let's go ahead. I think that was in bonds. So yeah, let's go and take a look at the bond market. So looking at like a 2-hour chart. Like if you really want to get technical, right, with which candle's the breaker, go into your lower time frames. Find the lowest down close, which here we can see would be this candle here. Right, so a very systematic way of finding the breaker. We have this rotation to the upside. That's the breaker because the breaker is a low, high, lower low for a bearish breaker. You're going to get the lowest down close here, which is a bullish order block on the buy side of the curve, but not going to get into all that here. And then you want to extend this to the right. And now we're going to go over to current price action. So this would technically be the breaker. Why on the daily chart did I just grab the lowest candle? Because I know on the daily time frame, this wick is going to have a down close candle in here to be used as a breaker. So because I've been doing this for a while, I can already anticipate that there's going to be a breaker at the low end of this range. So I'm just going to use this range here. But if you see I zoomed in, that's the real science behind why we're going to look for those candles there. So hopefully that makes sense there on the bearish breaker. Lizzie, Happy New Year. Looking forward to more payouts. Yes, sir. Yes, sir. That level is also the midpoint of the monthly wick, which is kind of interesting. Yes, sir. The more levels you have overlapping, that's called nested PD arrays. Even stronger for looking at reactions, entries, targets. The more levels you have overlapping, the better it is going to be for what we're looking for with algorithmic price delivery. Absolutely. Mr. Nuller, still trusting buy models on indices and dollar. I guess dollar doesn't have any effect on indices since last year. That's a great point. And if you look at what dollar's been doing the past 2 years, it's been in the consolidation. So whenever you see dollar in consolidation, that's going to allow other markets to do whatever they were already going to do. Right? So if we go over to the US dollar here, right, we can clearly see a defined trading range in here. Right, so because we have this trading range, the dollar's in a consolidation. So that's going to allow index futures and other assets to do whatever it is they were already going to do because this market's in a consolidation. Long term, if dollar just starts ripping higher aggressively, that will absolutely put pressure on index futures, right? So now that we're leaving consolidation and we're expanding, I do anticipate intermarket analysis with dollar and indices being more of a factor going forward. Justice, Happy New Year, Dylan, and all Manchester United fans. Strat King, hey Dylan, can you look at YM? Thanks and Happy New Year's. Yeah, absolutely. Let's take a look at the Dow. All right, so Dow's heavy. Dow's even more bearish than the other averages. We do have relatively equal lows here for Dow, so that does look like an enticing draw to trade into. And considering that the Dow is weaker than NASDAQ and is weaker than S&P, we could very well see Dow trade into those lows here. Not a big fan of the Dow because it does, I believe I say this every single time. Not a big fan of the Dow because it does trade not as in sync with NASDAQ and S&P, which isn't something I like too much, but we do have relatively equal lows for Dow. If we do remain bullish, though, we have these imbalances here on the weekly chart. So I know that's kind of like I'm calling both sides of the market, which I am right now because I'm neutral to bullish on indices. So when I'm neutral, it's not like last week where look at that swing low on the daily chart. That's where we're going. Look to short or get out of the way. This isn't that type of week. So I have to wait for more information, and I'll be able to give you guys more clarity as to what I'm looking at on index futures on a longer term horizon. So looking at the daily, we have this swing low. We did take out that low, and now we're rejecting back up to the upside. So what I'd look for Dow, we have this high here. That's a buy side liquidity pool. We have the fair value gap with volume imbalance here, and that's what I'd look for on Dow on the upside. As long as, again, same thing with the other averages, as long as order flow remains bullish on the hourly chart, right? So we want order flow to remain bullish on the hourly chart. As long as that remains true, we're looking for higher prices for the Dow. But Dow did not take out that high like NASDAQ did here and like the S&P did. So could that be an S&P and rotate lower? We'll have to see, right? So what I'm watching on NASDAQ as well is how we trade above these highs, right? So if we trade above these highs and we reject, we'll do what? We'll lose that breaker that I'm watching, right? So if we lose that breaker, that's bearish. So that's what I'm naturally looking at going into this week, how we trade above these highs. If we reject, naturally we're going to lose the breaker, right? And then that'll give me the insight that I need to look for lower prices or continue looking for higher prices if we remain above that level, right? So a lot of if we do this, then I'll look for that. Algorithmic price theory. Unicorn Queen, price action, order flow, and liquidity are the keys. Absolutely, no doubt, no doubt. Doesn't need to be that complicated, just need to know what you're looking for. Cyclops, 100 plus people on live stream today. Didn't notice. Oh, I got it up to 100 people. Appreciate you guys joining me. I'm honored. Ali, in general, with the internal. Oh, I got you. Just in general, I got you. Okay, so let me get back to your question. So for internal to external, you look for the liquidity and a discount, right? Depending on the market structure. So let's go over to dollar, an example we called live. And let's look at the concept of internal to external. All right, so from this low here to this high, we looked at it trading from internal range liquidity to external. Why am I looking for it to trade to a discount? Right, a lot of times I get asked, well, Dylan, sometimes it doesn't trade to a discount. Is there a breaker here that would prevent it from going lower? There isn't, right? So it's going to trade down to a discount. And then if I'm looking for internal range liquidity, I'm going to look for a low that's below equilibrium, which is this right here. So we have a swing low below equilibrium that's going to offer smart money good discount buying opportunity. And then from the internal, they're going to distribute at the highs here, at the external, or at the buy stops here, right? Because as the market drops, people want to short that, and they're going to put a buy stop here. Or people want to buy the breakout. Either one, they're buying an expensive price, so smart money's buying cheap, selling to the buyers at an expensive price. Daniel, on the dollar, when do you expect a consolidation or a deep retracement? So consolidations and deep retracements are going to be indicated on the lower time frame, right? So using what I gave you already in the live stream gives you the tools to see that, right? So we have gaps left open, indicating we're not only bullish, but it's in a hurry to reach higher. So when I see all those signatures, I'm not worried about a deep retracement, and I'm not worried about a consolidation because the market's signaling it's bullish. What would cause a reversal? Well, we'd see in the lower time frame, order flow would shift bearish. And then if I see that, then that could give me potential indication that we'll see a retracement. But as right now, everything's looking higher on dollar because of everything we've covered with bonds, institutional order flow on the yearly, monthly, weekly, daily, and 4-hour chart. Alessandro, on Wednesday, we have FOMC minutes. Do you consider it like the FOMC announcement? No, I don't. They're two very different news drivers. FOMC minutes, it's not going to be as violent as the actual FOMC. It's just the transcripts being released from their previous meeting, so it's not as impactful. It does create volatility. It does create relatively decent price runs in the PM session, so it's absolutely tradable if you desire. Because it is non-farm payroll week, though, I'm having business wrapped up by Tuesday. That's my style. Monday I'm trading. Tuesday I'm trading, and then after that, I'm done for the week until I come back on NFP Friday. If I make money Monday, I'm not even worried about Tuesday. I'll just tape read with the group, give them a world-class live stream as usual, and that's usually my game plan for NFP week. Look to get paid early in the week, and then I'm content with that. So I'm personally not even worried about what's going on Wednesday, but that should give you an answer for what you're looking for. Cyclops, thanks for your insights, Dylan. Absolutely, man. Peter, don't forget gold. Yeah, let's take a look at gold. I was just taking a look at gold when I was doing my own analysis here for the week. Let's take a look at gold. Where are you at? Weekly time frame. Very nasty. Very nasty. It's in a consolidation here, right? A lot of back and forth. If I were to call markets like this for you guys consistently, it would look like amateur hour, right? And I can say that because I know what markets I like to trade, what conditions are easy for me to call a market. And when a market is trading like this, right, it's just sloppy, a lot of wicks up and down. It's very difficult for me to give you long-term targets like euro and pound, right? Very different markets. Like let's look at euro. I tell you guys dollar's going higher, euro lower, and it just rips lower. Pound, same thing, right? Dollar higher, euro lower. So it's going to do what? Take out the lows here, and it's just an easy trending market to trade, to see where it's going to go. You have a bias. Everything is straightforward and easy. When you look at a market like gold, I don't have that in this market structure, right? It's 50-50 is what I'm getting at. So like I said, it would even look like amateur hour here to door trading if I were to call markets like this for you. Can you trade a consolidating market? Absolutely. So what you would have to do is then go into your daily chart, which looks even worse, right? Highs taken out, lows taken out, and then we just keep pulling back into the trading range. So in my opinion, it's a 50-50 market. Can you still trade it? Absolutely. You have to go into your lower time frame intraday and find targets on the hourly and the 15-minute chart. If even the hourly and the 15-minute chart isn't clear, it's not a market you want to touch or even trade. But if you want to trade it, look for the hourly, look at the 15-minute, read institutional order flow, gauge what you're looking at for that session for that day, because your visibility is not going to be there past 2 days and a week beyond, especially in this type of market structure. I don't have visibility in these market conditions other than just what I'm looking for that day or for that session. And to do that, all you need is your hourly and your 15-minute time frame. So not terribly interested in gold because of that. Give the stream a like, everyone. Absolutely. Please do. Please do. Helps us out greatly and shows some appreciation for what I'm giving you guys here on YouTube. He's saying NQ SMT on the daily chart. Yes, sir. SMT at the lows with S&P, that's going to be significant going forward, right? So if we find support at that breaker on the hourly chart and that SMT holds, then we're going to reprice for those premium targets that I shared with you guys. Absolutely. Hola, Dylan. ¿Podrías ver USD CLP? Let's see what that is. All right, so because it has dollar first in the name, so this is the first time I'm actually looking at this market. This is the, let me see if I can say that right. US dollar versus the Chilean peso. Nice. Great thing is, like I say, if it prints candles, we can call it, right? So US dollar is first in the name. Because the dollar is bullish versus the peso, we're going to look for higher prices on this market. That's why if you're trading currency, you absolutely have to know what the dollar is doing and what bonds are doing. Because if you're missing that and you're trading Forex, you're literally blind. So you want to understand what the dollar is doing and what bonds are doing, and that's going to help give you the bias. So because dollar is first in the name, it gives us a bullish bias because the dollar is bullish, right? So weekly chart, we had these equal lows, we had a run on stops. All significant moves happen after a run on stops, and that's where we're at right now. This imbalance here, that's our breakaway gap. We traded down into this gap here. Market hit midpoint, left the lower half open, exactly what we want to see in a bullish market. And from there, the market is ripping higher, right? So because the dollar is bullish, we're still looking for higher prices on this market. For targets, so we just hit midpoint of that wick. Next target would be the upper quadrant of that wick there. So the 1.038 and 26 pips, that's what I'm looking for, or pipettes rather, that's what I'm looking at there. And then on the upside, I can see us getting into the 106 level to clear out this external range buy side liquidity. Everything here is bullish. If we see from where the price run starts to where we're looking for the market to trade to, we even have that gap left open here at 50%. That's our measuring gap. So in my opinion, everything's a green light for higher prices for this market. Monthly chart, same thing. Yeah. So we're looking for higher prices on the dollar versus the peso. James, can you explain balanced price ranges and where to expect them to occur? So there are a couple different forms of balanced price ranges, all right? One of which is when the market offers both sides and we leave the range, right, like a bullish breaker. Another example is when two fair value gaps overlap, right? So if we have two overlapping fair value gaps, that in and of itself creates a balanced price range. I've touched on that several times before, so I'm not going to go into that too much here, but I have talked about it in the past, and that's a straightforward way to understand it going forward. To actually explain everything behind a balanced price range, that would take me quite a bit of time to explain it in a way that I'd be satisfied. So I'm not gonna get into all that. What are my thoughts on Bitcoin? Yeah, so Bitcoin took out the sell stops. Longer term, looking for higher Bitcoin. Yeah, everything's still bullish on the market. Let me see. All right, so they took out these stops here. Market's pulling back into the range. So we got this high here that I'll look for at the 99,000. We can really just call that the 100,000 big figure number. So I'm looking for 100K again on Bitcoin. And then from there, I want to see how we trade. We have this fair value gap up here, which was the breakaway gap when we're bearish. But when the market narrative changes, then it's not like it's always going to be a gap that's left open, right? Breakaway gaps are filled at a later time. So looking at this gap here, that's something we can see depending on how we trade above this high, right? So when we're live, I'm always saying I want to see speed above this high, right? So if we see speed above this high here, then we could easily get up into this level, make new all-time highs, and keep ripping higher on Bitcoin. All this drop did here, as of right now, is showing that markets or the market makers had interest in dropping it below these sell stops for accumulation, offering a discount to continue higher. So that's what I'm seeing right now for BTC. Silver Bullet Trader, good evening. Good evening, sir. Ryan, nice stream. Yeah, appreciate you joining. Glad you enjoyed it. Cleo, make sure to show some love to AT. Give the stream a like. Dylan is doing amazing work for us here for free. It's my pleasure, guys. Appreciate the support. Ali, beautiful. Thank you. Yeah, my pleasure, man. Strat King, thanks for looking at the Dow. Absolutely. Omar, always the best analysis. I just joined. We'll re-listen to the whole thing. Appreciate you joining, Omar. Glad you decided to join the call. James, on a week like this, would you expect a high impact news from Wednesday going into Friday? During Monday's trading, how should we know that the market will trade back to fair value? Well, there's a few things you have to look at, right? When I'm sitting down at my desk for the New York morning session, right, how do I know it's going to trade at fair value? Well, first, is there a gap, right? Like, is there an opening range gap from where we close on settlement to where we open at 9:30? Is there a gap? And then from there, I have to look at the market structure that's in play, right? Like if, let's say we open with a gap higher and I'm looking for a play down into fair value. Well, then what would I want to see? A market run higher first at 9:30, right? Clear some type of buy stop or a premium in efficiency. And then from there, we'll see a breakdown in the market structure, a shift in institutional order flow, and then we'll look for the market to reprice into the opening range gap and potentially the new week opening gap. Right? So there's your ATM machine on Mondays, right? And you just flip it if you're bullish, right? Let's say we open with a gap down and we're looking for fair value, wait for the market to drop, clear out a short-term low, trade into a discount imbalance. From there, you'll see a displacement higher, shift in market structure, look for bullish order flow, and strap in for the rocket into the opening range gap. Great question. Raj, are you a fan of Power of Three? Do you trade / plan to trade that model? Absolutely. Every single day, Power of Three is something I'm considering, right? That's why we look at the opening price at midnight. But Power 3 is not just limited to the daily candle. I'm looking at Power 3 on the monthly time frame. I'm looking at Power 3 on the weekly, the daily, and even on hourly candles. I'm looking at Power 3. So I'm always considering Power 3 in my analysis. Absolutely. It's one of the foundations for smart money trading, right? Is understanding how the market accumulates, manipulates, and distributes. And it's something that I do look for every single trading day. Absolutely. Raj, thanks for the stream. Absolutely. Appreciate you joining. To be clear, the 4-hour candle base Power of 3, absolutely, right? All candles, right? So even 4-hour chart creates an open, a low, a high, and a close, right? So there's going to be Power of 3 on all time frames. Outlook on USD. Man, you guys got me looking at all types of interesting currencies here. So looking at the dollar versus what's this called? The South African Rand. All right. And I'm learning some new currencies today. Man, you guys are here learning from me, but I'm here learning from you guys. All right, so looking at the weekly chart, because again, US dollar is first in the name, what's the bias, right? Higher. So what I'll look for this currency, as long as, again, institutional order flow remains bullish on the US dollar, we'll be looking for higher prices on this market as well. We have the buy side here at the 19 level, or at the 19.00 level. Above that, we have these relatively equal highs, 19.3, and then I'll be looking for all the way up here to the 19,900 level longer term. Again, as long as US dollar remains bullish and the bonds remain bearish. Eslam, can the mitigation block be considered a balanced price range? Absolutely, right? Because every mitigation block is going to be a lower time frame breaker. The mitigation block, the way it differs from, well, not all the time, but let me just go into it. So a breaker, right, is a high, a bearish breaker, high, high, or high, higher high, right? And then a low, and then we trade down into it and we drop down. This is a bearish breaker. A bearish mitigation block is going to be a failure swing. Right? So the only difference in the breaker and the mitigation block is the breaker makes a higher high. The mitigation block is associated with the failure swing, which just means it failed to take out this high. So these are the only two ways the market's ever going to reverse. It's either going to give you a breaker pattern, a run on stops, or it's going to give a failure swing. Those are the only way institutions turn the market. So in and of itself, it is a balanced price range, yes, because think about what's happening here, right? We get to move higher, lower, higher, then we leave that range. So it gives both sides a pass. We leave it, so when it hits that mitigation block, it should act as a brick wall and send price lower. Great question. Absolutely. Several different forms of a balanced price range. Can I check out USDT? Oh, the crypto market account? Sure. What is this? Ah, okay. So USDT dominance. I gotcha. Okay. Yeah, so this thing, we're looking for lower prices on this. Weekly chart. Two fair value gaps traded up into this one. Here we have a mitigation block here. Hit that, send it lower. So yeah, we're looking for lower. We'll look for 3.7%. That's what I look for on the downside. If we accelerate through that, then we could look for lower targets, but we'll take it 1 week at a time. Cyclops, I believe you shared a video on balanced price ranges in the Discord free group. Ah, yes, sir. I appreciate that. For the gentleman that was asking about balanced price ranges, shared that in the free education channel in our Discord, where I do get clips of what I'm talking about in live trading, teaching, to again, even continue to give our free community value every single day. So again, if you're not there in the Discord, seeing our free education, you're missing out. So if you want answers to these questions, many of them will be answered in our free education channel, which myself and my team do work hard to put quality in there every single day. Appreciate the reminder, brother. Gracias por el análisis. Yeah, my pleasure, guys. Thanks, Dylan. Enjoy the rest of your Sunday. Will do, Joe. You as well, man. Hi, Dylan. Can you talk about the change in the state of delivery? What about it? Like teaching it? The change in state of delivery is just a way to identify early reversals, right? So there's a couple different ways to identify reversals. Let's look at a different market. Let's look at NASDAQ. Good old NASDAQ, right? So there's a couple different ways to frame reversals, right? Here's the up close candle. This is a bearish order block here, right? Two different ways to qualify a reversal. This opening price being violated, that's when specifically the market changes from a buy program to a sell program. So if you know where the market's going, if you're bearish and you're confident it's bearish, you don't have to wait for a market structure shift, right? So there's several ways to confirm the market's reversing. The market structure shifts a little later. The change in state of delivery is sooner. So if you know where the market's going, you can anticipate reversals before we break structure using the changing in the state of delivery. So it's just simply a way to identify reversals. Again, it's all going to depend on drawing liquidity, right? If you know where the market's drawing to, then it's easy to anticipate the change in state of delivery and market structure shifts, right? Same thing here. Let's use dollar market we've been calling. Market took out stops. I told you guys we're going higher, this high, and trade up into this weekly imbalance here. If that's the case, what am I saying to you? It's going to be a reversal. If it's going to reverse, the market can only reverse in a few different ways. There's two ways. So run on stops, market trades higher. As soon as we trade through this candle's opening price here, that changes the state of delivery from a sell to a buy program. So that change in state of delivery, right, allows us to see the market's now in a buy program, which means what? It's just going to be offered higher. It doesn't matter who comes in and sells it, who's short, doesn't matter what these banks are saying, right? The market's going higher. Another way to confirm that is with the market structure shift, right, which is this high being taken up. So several ways to confirm a reversal, and the change in state of delivery is one of them. Phoenix Trader 2025 from Cali, Colombia. Thank you for sharing. Absolutely. Appreciate you joining. Ali, can't wait till you get 1,000 plus viewers live. It will be fun. I'm looking forward to it. Looking forward to it. If you guys know anyone that could get value from these streams, could help them out in the new week, let them know, and we can get to 1,000 folks in here together. I'd appreciate that. How do you define the next session bias? Hourly and 15-minute chart. So an unmitigated breaker block means the market is too aggressive to move. Yeah, well, if you're looking for a premium level, right? Like if you have a bearish breaker, right? And we want to see the market trade up into it. If it can't even do that, then it's signaling to you in the clearest way possible that the market is extremely bearish. Reaper, thanks. Got what I want. There you go. German DAX. Yeah, we'll take a look at the DAX. This will be the last market I look at here. Let's take a look at the DAX. So DAX looks bullish to me. We have this weekly imbalance. We're trading into it. As long as we find support inside that weekly gap, we'll be looking for higher prices for the DAX. Daily chart is a bit spotty. Yeah, so I'm neutral on the daily chart. Watch that weekly gap there, and that'll give you what you need to know. If we stay above it, that's bullish. If we melt down through it, then we can start looking for potential lower prices on the German DAX. With that, guys, that is the last question here. I do appreciate all you guys joining us on your way out. Please do give the stream a like. Helps us out very, very much. I will see you guys next Sunday. And with the way my schedule's been recently, I haven't had much free time, but I will look to maybe do a YouTube stream. I know I've been saying that for a while, but last time I said it, I said you guys would have to get the live stream up to 100 likes, and I'd do it. I'm not sure if we reached it, but if you guys get it there, we'll look to do a live stream sometime this month, right? We'd be happy to get on with you guys for a New York session open. All right, so with that, guys, take care. Have a phenomenal rest of your Sunday. I will see you guys on the next one. Take care. Stay safe. My absolute pleasure, guys. I'll see you on the next one.